invest into the stock market or pay off your mortgage? I want to share with you my thoughts on the situation. Very common situation and a fantastic question to be asking, because if you're asking it, that tells me you are in the right framework of mind. You're trying to build wealth. You're trying to make the numbers work for you. You're trying to make the system work for you, which is a great spot to be in. So even if we disagree, hey, at least we can agree on the common ground that we're under the same umbrella of, hey, iron sharpens iron. We're throwing out ideas, and at the core, we're just trying to do the best thing so that we can have full control of our lives and build wealth together. So, like I said, I'm glad we're at least under the same umbrella there. But let's just start off, and I'm going to give my opinion on all this for more of a, where would you stand situation in terms of the set of circumstances. But to set up framework here, a lot of people, and that would say, you know what? No. You don't want to pay off your mortgage. They're looking in and they're saying, well, on average, the stock market will return you 8%. And as of now, this can always change, but let's just use 3%. And they say, well, or you can go and pay off a mortgage that's charging you 3%. But they say, well, that doesn't make much sense though, because sure, a penny saved is a penny earned. So by paying off a mortgage, you're technically earning 3% because you're saving it, not having to pay it anymore. But I could take that same exact amount of money and go put it in the market and get 8%. And then when you subtract this out and play the difference, well, they would say, well, theoretically, then I can still net 5% in my pocket while also paying off a mortgage. So that's where that whole argument comes from. But I want to now just kind of translate that into, well, let's look at a couple different situations and where each philosophy would sit. So let's just first start off by saying the stock market goes up. You're going to have one set of people out there that is in a great spot. Who is in a great spot? Well, the people that decided to do the stock market, right? The people said, you know what? I'm not going to pay off the mortgage. I'm going to invest. They are in a great spot. They're getting their mortgage paid off. They're making extra money. Literally everything is firing on all cylinders. Their plan has come to perfection and they are in a great, great spot. But what about the people that decided to, we'll say, they paid off their mortgage? Where do they sit in this situation when the stock market just goes up? Well, I would argue they're in a good spot. Why are they in a good spot? They have a paid off asset. They have no debt. Like I said, is that a great spot compared to somebody that's paying off their mortgage, getting, they're kind of double dipping? No, it's not. You got to be realistic. Hey, the people that went in the stock market, great decision. But a consolidation prize, having a paid off house, an asset, debt free, that's still a good spot to be in. Not as good, not as great, but it's a good spot to be in. But now let's flip things around to the other side. Well, let's say the stock market actually goes down, which is very important because right here, that is an average. That's not a guarantee. There are no guarantees in the market. So that's always a very important distinction, is if you operate under the assumption that the 8% is guaranteed, well then yeah, of course, the no-brainer decision is don't pay off your mortgage. Do play the numbers right here. But like I said, there's that big old asterisk right here that I think some people forget about every now and then. There's no guarantees that the market is going to go up. Things could get sketchy. Things could just get a little shaky. And as you're about to see, in my mind, it kind of shifts things into somebody else's, favorable category. But in this situation, like I said, market goes down. So who is in a great, great scenario? Well, the people that are in the great scenario in this situation are who? Well, the people that paid off their mortgage. Now, why are they in a great situation? Well, it doesn't matter to them that the stock market's going down because, they didn't go that route, right? They chose to pay off their house. But the better, and what I would say is the most powerful, is because they have no debt, because they have a paid off asset, they're either hoarding cash, maybe they're doing other stuff with it. But when things get rough, when stock markets go down, that can mean that, real estate markets are also going down. But whatever is, the point is when stuff's going down and when you're debt free, you have paid for assets, then you're going to be able to start to accumulate, hoard cash. And when things get nasty, you can go bargain shopping, which is a great spot to be. You can go to the people that maybe chose to do that. And now those people are way underwater on their mortgage. These people have maybe they're losing job. I mean, when things get bad, things can get really, really bad. And the dominoes can start to fall. But if you're in a great spot, because, hey, I have no debt, I have a paid for house, you have a ton of flexibility. But then let's think about, and I kind of already revealed this, but what about the people that chose the stock market? Well, in my opinion, they are in a terrible spot. Absolutely terrible. I mean, it's like a double whammy of getting punched in the face. Not only are you still having to pay an interest rate on your mortgage, but that money that you could have used is now actually costing you because you're not making any money from it. But worst, you're losing money from it. And depending on how bad this gets, you could be losing a whole lot of money. Not to mention you have the job scenario, you have potential, other dynamics flying around, but you're in no doubt a terrible spot if the markets all of a sudden decide to just kapoof. Down they go. So really it's a question of, well, let's look at the two scenarios. We have the stock market looking at terrible or great, or you have, what some people would probably argue as the more conservative way to go about things. In the worst case scenario, you have good versus great. And for me personally, for my mental psychology, I want to be able to sleep at night. I want to be able to just give myself the maximum amount of flexibility. That's why this would win for me. I believe you got to just get that mortgage out of the way. And the other kind of hidden thing here is when it comes to the word need, there is none of that. I don't want needs in my life, right? And with a mortgage, you need to pay that mortgage. With a car loan, you need to pay that car loan. I don't like needs. I like when needs are eliminated because then that translates to full flexibility. So that's how I look at it. That is my approach. Now, if you're just high risk, high reward, let's go. All right, I can see it because you're looking at a great situation or you're looking at a terrible situation. For me, I don't know. I don't know if this conservative, I would call it kind of wise, but if I'm looking at either a good versus a great situation, or I can go bargain shopping, which is what I did with my real estate portfolio back in 2010-ish, that was a very good spot to be in compared to where my real estate portfolio is right now. But the reason I was able to do that was because I didn't have any needs. I gave myself flexibility. So like I said, that's my thoughts on it. Feel free to disagree. You can let me know with your comments down below. And I realize there are a ton of hypothetical situations. What about this and this? Well, what if that happens? What about that variable? And I'm not saying any of those are wrong. Again, at least we're all thinking, which is a good thing. But I'm just saying from a broad macro perspective, I'd rather have myself in the great and good category as opposed to the potential great versus terrible categories. So like I said, but I'd love to hear your thoughts down below, so let me know. If you enjoy these videos, if you kind of like the personal finance videos, like I said, I know this isn't a personal finance channel exactly, but it is at the core all about wealth building, taking control, mainly through trading and the markets. But if you enjoy this type of video, I'm definitely more than willing to do those in the future. So let me know, but yeah, consider it and do what you think is best for your situation. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.